Whether you're a beginner trader or you're an advanced trader, supply and demand is one of the most crucial concepts in trading.
In this video, we're going to be going over how to identify these zones, how to trade them, and some tips.
Now, before we get into drawing zones correctly, we need to understand that supply zones are aggressive selling and demand zones are areas of aggressive buying. Another thing we need to understand is that it has to be an aggressive move for it to be a valid zone. In this example, we can see that I made an aggressive push to the upside. Because of this, we could consider this a demand zone, to which you can just mark out a box on, say, a 5-minute time frame, and then you can use that when you're trading on a smaller time frame. When the price reaches a demand zone, it may struggle to move lower, or the stock could just completely reverse. Now for this example, we can see that the stock has made an aggressive push to the downside. Because of this, we can consider this a supply zone. And similarly to our demand zones, we can just draw a box here and use it to trade on different time frames. And when price reaches a supply zone, it may struggle to find higher highs, or like I said for the last one, it could potentially reverse. An indicator I really like to use to see supply and demand zones is the supply and demand visible range indicator by Lexalgo. You can just use the default settings, it works really well. Now let's get into how you can trade these zones. Here's an example of trading a reversal. As price begins to go towards the supply zone, it will bounce off of that and it will reverse down to the demand zone. Another way you can trade this is trading with the trend. As price begins to go towards that demand zone, we can anticipate that it will reverse to a bullish trend. And as price begins to go back towards the demand, we can anticipate, since in the past it has bounced off of that it will bounce off again and it will go back bullish. A tip for trading these reversals would be to pair the Lux Algo supply and demand indicator with the Lux Algo fair value gap indicator. Here you can see we have a fair value gap that is actually inside of the supply zone. So as price goes up to that supply zone and forms that fair value gap, it will start to push down. And then as it pushes back up to that supply zone, it will push back down. The pros of supply and demand zones are that they're easy to find, they can give you clear entry and exit points, and they can be used in a lot of different strategies. But sometimes finding them, it can be very time consuming, they can be oversimplified a lot, and they might not always hold, or it might not go your way. Anyways, with that being said, if you guys did enjoy the video and you found it was helpful, make sure to subscribe and leave a like, as it really helps the channel.